Hello, it's Robert Miner with Dynamic Traders Group with this week's DT Trade Strategies for the week beginning June 13th. That's this coming Monday, recorded for Twitter and YouTube followers. It's a brief trade strategy video compared to what we give to our regular DT Report subscribers, but every week I try to identify one or two very high probability trades that are coming up in the following week that you can take advantage of, and that you can also learn from these videos how to analyze and identify trades for any market and any time frame. Before we get started looking at charts and the technical position and trade strategies, a couple things I want to talk to you about. Number one is learn to trade, not to forecast. Trade, don't forecast. Two different businesses. If you want to learn to profit from trading, you need to decide if you want to be a forecaster or if you want to trade. And if you want to make a business of trading, your objective is not to accurately forecast the future, but it's to identify opportunities and to take advantages of those opportunities. Keep in mind that most people that write reports, and whether they're on Twitter or they do written reports or their websites, they're trying to be forecasters, not traders, and most don't trade themselves. And that's all right if they're providing you with analysis that helps you to identify trades, as long as they don't pretend that they're teaching you to trade. Here at Dynamic Traders Group, we do both. We, in our regular reports and our daily reports, is to provide you with potential setups, technical analysis that identify trades with a high probability outcome, trade strategies from entry to exit, all markets and all time frames. But also one of our main objectives is actually to teach you how to trade, how to make trading decisions, how to manage a trade, etc. And I do that. I've had a lot of experience with that. 35 years in the market, and proven track record, consistently track record of success. This is the past year in this global derivatives trade championship. By the way, this is real money, real time, up 134.4%. How about last year, trading Forex? Not a huge gain, but 38.9% for the year. Not too bad that's 2019. How about the year before, 2018, number one in a quarterly, well, it's about 5 months long, I guess, interest and index rate futures trading championship, 86.5%. So everything that I teach you comes from practical experience and practical trade strategies, how to identify trades and how to manage it. So please, decide if you want to be a trader or if you want to be a forecaster. If you want to be a trader, you want to learn to identify conditions with a high probability outcome and acceptable capital exposure. All right, let's get started and take a look at a couple markets for the upcoming week. So a quick look at the S&P. I looked at this in some detail last week and described how the prior week, actually on this day, I think it was, on this Thursday, how we had a sell signal on that day to go short for a possible multi-week high, but how I was stopped out later in the day for a very small loss. Well, again, myself and our subscribers had the sell signal by the close on Wednesday in the ES and the other stock indexes, and of course we all know what happened on Thursday. But a great setup for a short trade, and it was what we call high probability setup with a high probability setup with a high probability outcome and acceptable capital exposure. Still short in this market. And I'm going to just briefly show you a couple things. The details are for subscribers for the paid subscriptions, which, by the way, you can get a 1-month trial for $19. If you haven't had a trial in the past, it's only available one time. But if there's any time you're going to spend $19 and it's going to be worthwhile, it's going to be right now for these markets. Here's the 240-minute data. A potential that Friday was a wave 4 high. If that's the case, the ideal end of wave 5 target is 2960 down to 2930, which includes 127, 162% external retracement of a wave 4 plus the 62% retracement from the May low. So more than likely, we've got at least another day or two sideways to down. More than likely, we'll take out Friday's low, at least marginally. And again, these are just the typical targets. It's not a forecast. It's if the market reaches these targets, finds some support, maybe we have a bull reversal in the momentum, whatever, is we would be in a position to complete a 5-wave decline and a wave 5 low and a daily low followed by a 3 to 5 day correction. Of course, if we trade above Friday's high, that'll indicate that the 5-wave decline and the daily low is complete. So again, we don't do forecasts, we identify conditions with a high probability outcome, and then we take advantage of those conditions. So this is was a great setup. We're going to have another great setup in a few days following the first correction that we have against this new bear trend. Again, it's at least a weekly bear trend. We should be sideways to down for a few weeks. So we'll have another great setup, probably by the end of this coming week, where we do, as Gann said, the safest time to enter a new trend is on the initial correction to that trend. The safest and best time to enter a trade. In Elliott wave terms, that's on a wave 2 or a wave B, and of course that hasn't come yet. I provided for all of you, everybody that accesses my Twitter and my YouTube accounts, a big picture long-term report on the stock indexes back in late March and an update in April. I think it was early April sometime, or late April sometime. Anyway, gave you the probable outcome of this initial decline into the March low, and that was probably just the first leg down in a bear market. And there were certain conditions that needed to be met to complete this wave B correction prior to a continuation of the bear market to test and more than likely exceed the March low. Just suffice to say, as of this point in time, I'm not going to go into detail, that's reserved for subscribers, but all those conditions have been met. In fact, have been met at the extreme to complete this corrective advance. So more than likely, we're just in the very initial stages of resuming the bear trend that's going to test or exceed the March low. There is a signal not too far below the market that's really critical that, again, we identify for our subscribers and update it if it changes, but is critical that will confirm that that's going to be the case. So just fair warning for you out there for the stock indexes in the weeks and months to come. Again, if there's ever a time for you to spend $19 on a one-month trial to one of our reports, and even better is our Trade Alert report, is just $39 to test it out for a month. Now's the time to do that. Your financial livelihood for the next year or two may depend on having that information. And by the way, another little plug for our Trade Alerts, which gives some specific trade situations and trade strategies and buy sells, that sort of thing, how to adjust your stop. We had a special situation early last week for the VXX, and the buy signal was on Tuesday on the close, and of course it's already up about 25%, even though it gave back a fair amount on Friday. And we've exited half that position. It's part of the plan on when you do multiple unit trading, which every single long-term successful trader does, is they do multiple unit trading. So they protect part of the position very quickly and usually exit relatively quickly. So you're guaranteed, well, they're never guaranteed, but you have a small profit and then you have a part of that position you're holding on to for a longer term trend. And there's always opportunities to re-enter. But this was a fantastic setup, and it was a special situation we usually wouldn't recommend. Or it's not a market that we look at every week, but it was such almost a beautiful gimme at the time, and it also helped us to identify that the stock market was probably about to take a big hit. And there's a reason for that the VXX was giving us a warning about that as well. So this is another advantage of our DT reports, is if we identify a special situation, we let you know about it. Okay, let's take a look at silver. We looked at that last week. Let's see where we're at now. So this is silver 240-minute data. And as of Wednesday, I gave a warning that silver was about to roll over to the downside because we had had a 5-wave decline in outwave terms that identifies the higher time frame trend as bearish, a potential ABC correction right into the ideal end of wave C price target zone, and our daily momentums were bearish. So we're more than likely we're going to roll over, and the signal that we had completed an ABC correction would be a trade below what I had labeled as a wave B low, and that was at 1769. And of course, we did that on Thursday, kind of a narrow range day on Friday. But more than likely, this is an ideal pattern reversal signal that silver is going to continue to a new low. In fact, we've got some time factors that it's going to continue to a new low into the week beginning June 22nd. So we should be sideways to down into that week. But it's still just in the initial stages of completing this correction, so there's still a trade opportunity. If you didn't take advantage of the information I gave you last Saturday, warning that we were indeed in a weekly bear trend that would continue for another couple, 3 weeks. And again, the daily momentum made a bear reversal on Friday, so the setup's still there with very limited capital exposure for a continuation of the bear trend in silver, gold, the GDX, all three of them. Again, I've had so many emails and Twitter comments that about my position for the last few weeks, actually, that gold should be net sideways to down for several weeks, ideally into the week beginning June 22. And that's exactly what's happened. It's been sideways, not real bear trend, but net sideways, and that's the direction anticipated. And that's the direction to continue to anticipate for at least another week to 2 weeks. So again, we're about to roll over in gold as well, it looks like. Daily momentum's overbought. We have not closed above 1751.70. So more than likely early next week we'll be sideways to down for another week to 10 days in silver, gold, and the GDX. So I hope you take advantage of that information as well. Well, that's it for today. Hopefully you have a fantastic weekend, a fantastic next week. If you like what you learn here, check out our DT reports in a 1-month trial. And I'd be happy to be of service to you in the years to come, as I've been doing for almost 35 years. Take care.